Hi, very good afternoon. Welcome to another Currencies Direct Sterling Euro update with me, Keith Spittlenick. It's Monday, the 8th of August. Well, Sterling Euro, we're trading at 115.08, so nearly a whole 3.5 cents higher than where we were this month, which is obviously good news for anybody looking to buy euros. It's been a rather frenzied month on the foreign exchange markets, to say the least. This does look set to continue for this month as well, really, as the ECB are persisting with this strategy to try and halt the contagion spreading through the Eurozone economies. Yesterday, in fact, Jean-Claude Trichet, leader of the ECB, indicated that the European Central Bank will start buying Spanish and Italian bonds, really in an effort to try and stop the fear of either a bailout or a default spreading to the Eurozone's third and fourth largest economies. All of this has left the euro rather fragile, and it does seem these tough times are certainly set to continue for the single currency, certainly in relation to its major rivals. Now, over on the other side of the pond in the States, they finally settled their ongoing dispute to try and avoid a default on their deficit by raising the debt ceiling, and the figure that was ultimately agreed was a whopping $2.1 trillion, which is an awful lot of money in anyone's books. President Obama's been warning, really, that the economy was suffering a Washington-inflicted wound on America, and he himself, he's obviously pushing for much greater measures to try and eradicate the deficit so that he can realise his dream of leaving his second term, if he gets one at this point, with the US debt-free. Now, the situations in Europe and over in the States as well have taken the spotlight away from sterling, which is probably a good thing because we're not in the rudest of health, and as a result sterling's been relatively buoyant despite mixed figures coming out of the UK. In fact, recently we've had three indicators of growth from Britain's three main sectors, being manufacturing, construction and services, all released with quite a big differential between the numbers. Going with the trend for the last 10 years or so, the UK manufacturing centre has continued to decline. That showed yet another negative figure. However, much better than expected releases from the other two sectors, especially services, managed to balance the outlook for the UK into a positive one, albeit only just. That's all for me for this month. Please have yourselves a fantastic month. We'll be back in September.